95, I started the company Endeavor. Endeavor is an agency, it's a marketing company, it's a licensing company, it's a lot of things. Through Endeavor, we bought a bunch of companies. One of them was the UFC. And then we took UFC and we merged it with the WWE.
What have you learned about the business of sport maybe that's different than the entertainment business?
When we moved into the sports world, we could own the asset as opposed to representing the asset.
But how has the Netflix era been so far?
Shows performing, so we're thrilled. I think they're happy. The numbers are up.
Welcome to Group 4's presentation. This is Gavin Miller, Tim Mizerak, and Ben Myers. We are making our investment pitch for TKO Group Holdings Incorporated, a premium sports and entertainment company.
Okay, to start, we're going to do an overview of the company info, and the executive summary. So to start off, the parent company is TKO is the parent company of the UFC and WWE. They were actually formed in September of 2023, so it's a newer formation here. They're also a global leader, so it's sports entertainment and combat sports in general. They outperform a lot of their competitors. You know, UFC, WWE are some of the most well-known names across the entire world when it comes to these type of sports. Their fan base, so they've even exceeded over 1 billion across all platforms worldwide. The revenue streams include media rights, live events, sponsorships, and then merch. So it's kind of TKO is a big opportunity of a lifetime. It's an amazing company that's like really growing. So we're going to cover some of the opportunities. So more opportunities, they have multiple revenue streams, right? So they have media rights, live events, sponsorships, and merchandise. So media rights, obviously they own a lot of the rights to like the events and the fighting, the viewership, stuff like that. The live events, right? These are some of the biggest money makers here, right? They host these big live events with UFC fights. Well, people come from all around the world. People tune in from all around the world to watch and pay to watch these fights. Lastly is merchandise. So actually one of the biggest toys and big thing is the UFC or the WWE toys, right? Little kids have a little John Cena they're playing with, and you know, it's, make them fight, make your own WWE fights together. It's one of the biggest merchandise things for them as well. Next is the competitive advantages, right? So they're a global leader with the UFC and WWE. So, I mean, compared to other fighting organizations and just other similar entertainment organizations, they're really beating these people out, right? There's other fighting companies that we probably haven't even heard of, right? And then compared to the UFC and WWE, they're much larger. Next is a strong leadership. So they have experience, stable management with a proven track record. So one of their owners is Dana White. So Dana White was able to take the UFC when it was very small. At the time, people were like this, saying it was bad. It was human cockfighting. People really didn't like it. There's a lot of negative stigma toward the UFC because at the time, boxing was the big thing, right? You had like Mike Tyson, Muhammad Ali throughout the years. That's what everybody loved to watch, and the UFC kind of like challenged this. And there was even like a big debate between like, you know, this isn't even like realistic fighting, real fighting compared to boxing where it's skill. People were just hating each other. There's a lot of that going around. But Dana White was able to take it from when it was like that to this big mainstream thing that is now, where at this point it's kind of surpassing boxing. And more people are tuning into a UFC fight because they find it more entertaining and more of a skill thing to watch. They enjoy it more. Next is positive financial health. So they have consistent cash flow and an efficient capex light model. So, and with UFC, they don't have to pay for an arena. They kind of rent out arenas. They they don't own a football stadium to like a football team does, right? They rent out a football stadium to sit at. So this means they have like low costs for their events and stuff like that. So they're not paying a ton of money to run a facility, all the payments that come with that. They rent it, they pay the renting fee and whatever like entertainment stuff to set up, and that's pretty much it. Right, and then they just get the money from the fight. They have their costs with that. Lastly is their growth potential. So they're expanding into a bunch of new sports and markets. So some of that includes like the new Ultimate Slapping League, where they're just slapping each other super hard. And then there's bull riding and stuff like that. So they're growing and they're grabbing all these niches and new stuff coming in. So that's some of the great opportunities for the TKO. Next is they're going to be their competitors. So we have our first competitor here, which is going to be Madison Square Garden Sports. So some of their pros is they're an iconic brand with strong local market in New York City, right? Madison Square, right? And their cons include their revenue is tied to ticketing, sponsorships, team success, and limited events. So why does TKO beat Madison Square Garden, right? So they're a global brand. TKO is not just based in New York; they're all over the world. You see UFC fighters from like Dagestan, and then some from Ireland, a lot from America. You know, it's all over the world. UFC is just global, and you know WWE as well. and they have predictable revenue. So, I mean, on average, they can gauge how much they're going to make per event, like average pay-per-view cost, how many seats they have in an arena, how much they're going to sell out there. So they can have somewhat of a predictable income for their events. And they also just have a ton of events year round. Next is going to be Liberty Media. So a pro with Liberty Media is their global brand. So they work with Formula One. They have low debt and a strong cash flow. A con with them is their net losses, limited diversification, and smaller scale. So they're pretty much just their biggest thing is Formula One. Now, opposed to TKO, where their biggest thing, they have WWE, they have UFC, right? These are big things, and these two niches in their thing is very large and expanded to a big audience, opposed to just having Formula One. Next is Live Nation. So they're a global network. They have a strong cash flow for their pros. Their cons as they're high leverage. There's seasonal risk, right? And opposed to TKO, where they have higher profit margins and no off season. So, Live Nation, depending on the season, they don't have as much going on. Opposed to the TKO, where it's all around, like year round. Technically there's no off season. So events pop up whenever, and they can have that income coming in year round. Next is going to be the United Parks and Resorts. So they have a strong asset management. They have predictable income for their pro. And their cons, they include vulnerable to external factors such as weather and animal care. These are parks, if it's raining really hard, no one's going. And they have their animal care, which is like, being able to handle animals. You never know what's going on with that. And then they have their why TKO is better than them is they have a diversified revenue streams and their year-round schedule. So similar to the last one, that type of benefit. Lastly is their business and revenue model. So I touched on this a bit earlier, but they have diversified revenue in their media rights, pay-per-view, sponsorships, and live events, right? So like I said, they make a lot of money from people just coming to pay to come see these events and watch these events. And they have a bunch of sponsorships, stuff like that. So like you look at an arena, like, you're seeing a bunch of random like people on there. Like Uber Eats is on a UFC like arena for like no reason. But then they get paid a lot of money for that, and that a huge stream of income. Again, the live events, they bring a ton of money in. Not only are you getting people watching, people are sitting in these seats, and then merchandise. So like that's not one to not like credit here, even though they're like more known for just the fighting. Like or WWE toys are one of the everyone from your little you have like your little UFC guy or WWE guys making them fight each other. You have your own little events going on, and like as you can see, like having like a John Cena toy there. Everyone loves John Cena. So next, their global reach. UFC and WWE hold events worldwide. So I did touch on that again. Like really, UFC is completely global, right? And speaking to go back to John Cena, actually, John Cena is one of the most like well-known guys ever. You're gonna go to some random place, you show them a picture of John Cena, WWE, they recognize John Cena. You show them some football player, they have no idea who he is. So opposed to that, it's like very big global reach. Next, the recurring income. So with their media deals, they provide steady and predictable revenue. That's just coming in that way. That's their costs versus their revenue. So I did talk about they don't have a lot of like overhead in terms of like making money and stuff like that. So they kind of get the money that comes into them. They don't have to pay a lot for like a stadium or kind of fees like that. They kind of just pay to have the events. Lastly is fan monetization. So like ticketing, streaming, merchandise, and digital engagement. I touched on those points as well.
So as we touched upon earlier, the this whole entity came about from a merger of UFC as a subsidiary of the Endeavor Group and the WWE, which was its own standalone company. So back in September 2023, these groups came together and formed this basically the super group called TKO Holdings. Now, at that time, the Endeavor Group, again, the parent company of UFC, took on the controlling interest, over 60% of the company. And then later on, their partners at Silver Lake bought out their controlling interest. But regardless, we have one entity who has the greater majority of stake in the shareholders of the company. Now, some people could have some concerns about such a large majority controlling stake in one institution. But the thing that we'd like to point out is that these are all the same people that brought these companies to notoriety and profitability. There was not a bunch of turnover from the merger. The executive team for TKO largely came over from Endeavor. These people include Ariel Emanuel as the CEO, Mark Shapiro as the president and the chief operating officer, and Seth Krause as their senior counsel. These are all Endeavor executives who stayed on to become the TKO executives. In addition, Andrew Schleimer, who's the CFO of UFC, is now the CEO of Endeavor as well. So these are people with a proven track record who are staying on board, saw the merger all the way through, and are continuing to grow this company. On top of that, the subsidiaries continue to have their same management team that they had beforehand. The WWE still has Nick Khan as the president. The UFC still has Dana White as its president. And as we see, Dana White can be quoted as saying, be a person with a vision and the passion to do it and be willing to fight for it every day. That's the type of intensity, the type of motivation that this team brings to the table. They care about this company. They've spent years and years growing this since the 90s and 80s and beforehand. It's the same group that have been growing it all along, and we expect them to continue to take that passion and grow it in the profitable ways that they've always done. So just like TKO's athletes need a balanced diet to grow, we know that TKO's management team wants to keep their assets well managed and balanced so that it can continue to grow. So the first thing we want to look at here is the return on assets. So we know that TKO it didn't have a tremendous year in 2024 when it came to the ROA, only 0.05%. It did stay in the positive though, and keeping in mind that they just had a major merger. This is a major restructuring disruption to their operations. So even despite that, they managed to keep it positive. And we've seen from some of their competitors that they've not done quite so well. So, for example, Liberty Media, they had some restructuring that went on. They spun off their Sirius radio channel and sold that. And you could see that they were running almost at negative 10% on their ROA. So, some of these competitors have handled it better than others, but we know that TKO has kept it in the positive, even as other competitors have dropped below. And we know they're not even really that far off from the industry average. When we take a look at all of our competitors, the industry average on the ROA is only about 1.5%. So we would expect them to bounce back from this, just recovering from this disruption and being able to continue to bring it back to the industry average. Now we can also look at the asset turnover trends here. So we know that the management's pre-merger track record. So we're talking about the management team of WWE and the management team of Endeavor before they joined forces. They were doing wonderfully with their asset turnover rates. They were over at about 50% in 2021 and 2022. We only see the drop off when they had the merger, the year of the merger, where it dropped down to 12%, which you can expect because of the disruption that occurred from the merger. But already they're bouncing back. They're already at 22% in 2024, which is actually in line with the industry average. When you average out all of their competitors, they're coming out to about the same amount. So we could expect an upward trajectory from this management team because, again, it's the same people, the same experience, the same passion and drive that have always been behind us. They're going to bring these numbers back up. Just there's no reason to expect them to not get back to where they were before.
So I'm going to be walking us through the TKO financial highlights and why this company is a knockout investment. So first, we're going to look at the income statement on the left side of the screen here. As we can see, the revenue for 2024 is at $2.58 billion. And that is a 7% increase from the 2024 revenue that they reported in their income statement. So next we go to the operating expenses, and we can see that TKO decreased their expenses in 2025, it was a $1.97 billion, and that is a 20% decrease you see there on the screen in their operating expenses from 2024. And then most importantly, the operating income. So in 2024, they had a $59 million loss. And then in 2025, so far, they have a $606 million profit. And then after Uncle Sam, TKO took home a $439 million net income. To note, TKO operated at a loss of $188 million in 2024. And of that $439 million, TKO took home $157 million and $282 million went to Endeavor Holdings. Endeavor Holdings owns 61% of the voting rights to TKO. So a key takeaway from the income statement and what it means to you as an investor. It's a huge turnaround from a prior year loss. And now TKO is profitable and has a growing revenue with strong operating leverage. And the swing demonstrates revenue growth, cost discipline, and strong operational momentum. Next, we go to the balance sheet on the right side of the screen. So the total assets, which is the bar on the far left, assets grew to $15.34 billion, which is in the green. and that is up from $15.11 billion, which is the gray bar on the screen. TKO's goodwill remains steady at $8.44 billion, reflecting a long-term value of acquisitions. And the liabilities, they reduce that as well, just like in the income statement with the expenses. Their liabilities in 2025 are $4.81 billion, and in 2024, $4.97 billion, reducing leverage as again. And in stockholders' equity, or is at $10.34 billion, solidifying the foundational value of TKO. And next we move on to the stockholders' equity statement and also the statement of cash flows. So first we'll start with the stockholders' equity statement. So equity sits at $10.34 billion, just like I stated before in the balance sheet. So a big number here for you as an investor, the retained earnings. In 2024, TKO reported a negative $292 million loss in the retained earnings. In 2025 so far, they have reported a negative $130 million loss. And that's a clear sign of turnaround and a lot of momentum moving into the end of the year here as we continue to get closer to the cold weather. And then dividends, TKO gave out $62 million, which is 76 cents per share dividend, showing the management's commitment to shareholder value and the shareholder returns. Next, we move on to the cash flow on the right side of the screen. So cash flows were especially strong. Operating cash flow surged at $559 million, which in 2024, it was $352 million. Net cash flow came in at $180 million. Even after the investments and the shareholder payouts, they still took away $180 million. Non-controlling assets, not on the screen here, but thought it was important to talk about. Endeavor Holdings has a $6.08 billion stake in TKO. That is their book value of the stake that they have in TKO and how much Endeavor Holdings believes in TKO and the future of the UFC, WWE, PBR, Zuma Boxing, all the other multiple revenue streams that TKO is a part of. Endeavor Holdings has a $6 billion stake in it. Also, the statement of cash flows just shows strong free cash flow that TKO has after covering the friendly dividends and distribution. And everyone loves to get paid for a stock that they own, which increases the rate of return that you will get when you own TKO Holdings. Next, we move on to our growth potential and acquisitions. So recently, the Paramount agreement was worth $7.7 billion. It's the largest sports media deal in the history of sports media deals. The UFC, with the Paramount deal, secures positive. It gives TKO predictive revenue streams, and it reduces the exposure of fluctuating costs that TKO might run into in the future. So the multiple revenue streams, UFC, WWE, PBR, and Zuffa Boxing, broadens the reach that TKO has. It has a global reach of over 1 billion viewers worldwide. So Zuffa Boxing, if you've never heard of it, is a new boxing. It is a multi-million-dollar investment that TKO expects to take home. And then back to the global reach, UFC and WWE already host events in Europe, Asia, the Middle East, and Latin America. And with the Paramount Plus deal, they might even reach more people, which is another reason why you should invest in TKO Holdings.
So, in summary, why invest in TKO? Well, it really boils down to a few summary points here. So, number one, TKO brings together multiple storied franchises under one brand. You have people that will remember watching wrestling from decades ago up through the current day, kids getting into it. It's something that's been passed down through generations. But on top of that, there are exciting and unique experiences that you don't get anywhere else. You don't see other entities offering UFC and bull riding and these types of experiences on the level that TKO brings it to the masses. Second, as we've explained, the same experienced leadership has carried over from Endeavor and UFC, and even from their subsidiaries, are still in charge. The same numbers that we've seen in the past in terms of growth and profitability, we can expect to see continuing into the future under this leadership. It's a stability that every investor should be able to appreciate, knowing that the people that have steered us this well this far are going to continue taking it into the future for us. We also know that this TKO has strong cash flow, even during these acquisitional periods. Like we've seen from the competitors, they don't waver as much as we've seen other entities do. So we can expect them to have the resources to continue to grow and to keep things in the positives so that shareholders get their dividends so that you, as an investor, get your payments out of it. We also know that they're expanding their markets and they're generating brand new opportunities for revenue. So whether it's through streaming, through the WWE network, or growing into different global markets, we know there's a lot of places where they can continue to expand on this company. They can acquire new entities just like they've shown in their track record and be able to bring on new profit-making opportunities. And finally, it's just plain cool. I mean, you can own stake in a company that sells out arenas and stadiums every other night. So you can log on to Netflix and watch Monday Night Raw and know that, your investment is part of that experience. You are now part of the fabric of the global worldwide entertainment network that TKO sponsors. So with all that being said, we really appreciate you taking the time to view our presentation, and we hope that you will join us as an investor in TKO Group's holdings. Thank you very much.